broadcast is now starting. All attendees are in listen-only mode.
Okay, traders, a very good afternoon, good morning. Just running through that CPI print that's just come through. We'll take a look at that, just took a very quick long on that and just closed out the position there. Right now, folks, hope everybody's doing well, that you can see my screen and hear my voice okay. Let me just, could you let me know that everything's coming through okay? I've had problems in the previous weeks starting the broadcast meeting. Let's have a look. Okay, I hope everybody can see my screen and hear my voice okay. Today we're going to be just checking. I think everything's okay. Yeah, thank you, Miha. That's great. Very good. Well, very warm welcome, Eddie, Gavrel, Miha, Salman, Setley. Good to have you here. Don't forget, as we look at different entries and exits, the whole idea of this workshop is we're looking at different opportunities. And it's from an educational perspective. It's not from a signal trading service. The idea of this is you look over my shoulder, so from a professional trading background, you see how I go about making trading decisions. And then that is the way that this workshop works. We're going to be looking at the Bank of England decision. What's expected, what's the surprise, what's the big picture, and what's the instrument. Now, we're going to do that a little bit more relaxed, but I want us to cover the CPI print that we've just had. So let's look at that opportunity. I just took a quick long on gold on that trade, and I'm just going to run that through with you. So let's just have a look here. So, okay, so this inflation print was really important today. And the reason that was so important today was because investors are looking at it very, very carefully to get a sense of what the Federal Reserve next move is going to be. Now, if you take a look at the short-term interest rate curve, what you'll see is that the Fed is now expected to hold on rates at their current rate of 5.125%, and then expectations are that they're going to cut into the end of the year with actually, at the moment, 2 interest rate cuts for the end of the year. Now, this is short-term interest rate markets pricing. It's not necessarily correct, but it is what investors are expecting. So as a result of those expectations, the market is expecting that kind of dynamic. Okay, rate holding and then rate cuts. Now, the Fed can only do this if inflation is not a problem. Remember, the Federal Reserve repeatedly has stated that they're trying to bring down inflation. And if you just look at the Federal Reserve's last rate statement, right, you're going to see here, Federal Reserve's, the extent of these effects, the committee remains highly attentive to inflation risks. So what they're telling us is they want to keep inflation at 2%. We know at the moment it's well above that 2% target. But what that means is that they are, very, very committed to keeping it at that level. Now, the inflation print has now come in. Yes, expectations were for 5% for the headline and 5.5% for the core. That's as expected. Now, that 4.9% is lower than forecast. That's why we've seen a sudden surge in dollar weakness. So what we'd expect in that kind of print, you'd expect the dollar yen to fall, gold to rise, you'd expect upside in the E-mini. Okay, so that's exactly what we've seen. And if I just pop you over to my other screen, you'll see that what we'd expected to see, we have seen. And you can see here, upside in the S&P 500, upside in gold into the pivot point, downside into the dollar yen, and a little bit of upside in oil. And that's just on that dollar weakness. Okay, so that's all kind of as you'd expected. I took a quick long on gold in the futures market, just because I could see how market was reacting to that print. Now, ideally, what I wanted, if that was below 4.8 and that was below 5.2, gosh, I would have been, piling into those gold longs. But as it was, just slightly below expectations, so I just got a tentative gold long, and that's just moved up into that resistance area. Now, I would anticipate buyers on the dips. So let me show you where I'd expect buyers. And I'm going to show you another chart here, which is the gold futures chart. And you can see where, please excuse me, you can see where heavy volume of buyers are. Now, let me just show you this. I need to make sure I show you the right screen. There we go. Right, now, what I want to show you here is this is the gold futures chart, and you can see we have a lot of heavy buying around the 2042, 2040 region. You can see the imbalance, and you can also see pretty heavy volume up here around the 2044 region. So I would anticipate if we got a move back down to 2040, I'd expect to find buyers back at that level. Point of control sitting at 2038. So if we see price move back down to 2041, I would expect buyers to step back in and then potentially looking for a move back up like to 2045. So that's what I'd anticipate in gold markets at the moment. So I would expect to find dip buyers on that. Now, let's go back to screen 5. Now, what we're looking for here is the Bank of England interest rate decision tomorrow. Okay. Now, obviously, with the outlook I've given you, there's obviously risks to those trading outlooks, and all outlooks have risks, and that's no exception. So the risk is that the market just fades this, but the market's been so hungry to buy gold, that even when we had really strong reasons for gold to fall, dip buyers have stepped in. So I am expecting dip buyers to step back into gold, but obviously I would only expect that sentiment to last for about 1 or 2 sessions. Now, Salman's asked a good question. How will recession affect the cryptos fundamentally? How is the dollar gold euro expected to behave if economies fall into a forthcoming expected recession? So what I expect, you expect dollar to fall, Salman, right? First of all, the de-dollarization scenario, if realistic, right? Think of 10 years time for that. So put that out of your head for now, okay? De-dollarization, speculation. Could it happen in 5 years? Maybe. It's not going to happen onset. It's something that will happen gradually and slowly if stroke when it does. All kingdoms rise and fall. That's the way life goes. So no country is invincible. The US still, though, at the moment, Salman, is the world's leading economy, and it does not have a challenger. The primacy of the US dollar remains the situation. So don't think that that's going to change anytime soon. So leave that out of your head. At the moment, if there's a big recession, if it's a mild recession, you'd expect the dollar to fall, and if inflation sort of remains as it is, I'd expect the dollar to fall, and as long as the dollar and real yields are falling, I'd expect gold to really rock higher. If there was a big miss in the inflation print today, I was expecting gold to make all-time highs. It may have a run for all-time highs anyway today. It's just desperate to push higher. I'm just long structurally gold and silver as a result of that. Have been for some time. So I'm expecting gold to reach for those all-time highs eventually. Now, the thing to look at with the euro is the euro and the dollar will move in opposite directions to each other, Salman. So if there's a recession in the US and it's sort of relatively mild, you expect euro US dollar upside. If the recession is very hard and it affects the global economy, you'd expect euro US dollar downside because you see dollar on safe haven bids. look up, Salman, the dollar smile theory, and that would help you. In recession, dollar is considered a safe haven. In a hard recession, yes. In a soft recession, no. So if it's just soft, then you can see the dollar falling in line with interest rate expectations. So look at the dollar smile theory. So you can see that on HYCM's blog. I've written about this quite a lot, different places, written it for Forex Live. Let's see if it's here. There's. So what you get, Salman, is the dollar gains when there's a big US recession, and the dollar can gain when the US outperforms the rest of the world. So it gains on safe haven demand, and it can gain when the US is outperforming the rest of the world. But when it's like go global growth together and everyone's in the same boat, then you tend to see the dollar weaken. So my base case at the moment, Salman, is I'm expecting dollar weakness for now. And if that changes, I will make it clear. That's my base case at the moment. Hey, Nat Salmon, no worries. Good questions. That's what I like to see. People asking good, intelligent questions. And even if you ask a silly question, doesn't matter at all. It's good to ask questions, but that was a good one, Salman, and some great comments there from you. Right, now what we're looking at here is Bank of England decision tomorrow. So we got excited with that, print, which is as it should be. It was one of the most hotly anticipated prints of the day. So very much expecting that to move. Now, if you just take a look here, we've got the Bank of England interest rate decision tomorrow. Now, what's expected? So what's expected is a 25 basis rate hike. See, 99% chance of a rate hike is expected. Markets are expected to move it up to 4.89%. So short-term interest rate markets are pricing in more than 2 rate cuts from here. So one now and then another one, and then maybe even another one. So 2.5 rate cuts are expected. That's very hawkish if you take my thinking. Okay, it's a very, very hawkish outlook, and is arguably too aggressive and too hawkish. So what we want to see here is the best opportunity tomorrow is going to come if this pricing is rejected. So there's a significant chance the Bank of England don't deliver such a hawkish outlook as this. Now, if you think about it from the Bank of England's perspective, they're dealing with very high inflation. 10.1% headline inflation is in the UK. I think the core is about 6.2%. So very sticky in the core, problematic with the headline. So the Bank of England has to act, and has to act quickly in order to tackle that surging inflation problem. However, what we have to be aware of is that, the Bank of England also has to think about slowing growth. So if it keeps hiking interest rates, it's going to crimp growth in the UK, and that's no good either. So what I'm expecting is the Bank of England to kind of either hike by 25 basis points or not hike by 25 basis points. I know it sounds silly, but I could see them being on a pause and not wanting to hike too soon. But though I'm expecting them to hike, but I could see them pausing. That wouldn't be out of the world. And the best opportunity will come from them hiking and then saying that's it. If they hike and say that's it, then all this pricing has to change, because 4.25% is priced in, and up to 4.89% is priced in. Okay, so that's what markets are expecting. They are expecting a move higher. So if the Bank of England tomorrow say we've hiked interest rates and now we're not expecting to do any more, all that's going to be priced out, and that means pound weakness. On top of that, if you look at the seasonality, look when the Bank of England hike interest rates, look how the pound has behaved over the last 23 years. In the day prior and the 2 days after, every time the Bank of England hiked interest rates, it's fallen nearly 80% of the time. So 72% of the time, the pound dollar's fallen, right? So pound dollar weakness out of the decision would make sense. Although the bit of dollar weakness is going against that at the moment. So if I just show you what I mean, the pound will be rising higher at the moment on the weak dollar. So do you see how the pound's pushing higher? It's pushing higher on that weak dollar. Look at the dollar index. It's dropping lower. Why? Fed has to do less. Low inflation, dollar weakness. That's coming back to the sort of soft landing, weak recession outlook, Salmon, that we're talking about. As long as that's the case, you'd expect the dollar to weaken. So that's the reaction that we'd anticipate. That's pushing the pound higher. So that's not what we want to see. So an alternative to the pound US dollar is maybe looking at the euro pound. So if we look at the seasonality for the euro pound. Now, if we see a very dovish Bank of England tomorrow, so they hike by 25 basis points and said, that's it, they're done. In that case, what we'd expect is the euro pound to gain. Okay, and you can see that in the day after the Bank of England hike, euro pounds gained 71% of the time. So euro pound gains could look attractive. And if you look at it over the next, over a week of trading, you can see that the euro pound tends to rise from a seasonal perspective when the Bank of England hikes rates. So all of that means there's one opportunity that I can see tomorrow. If they're hawkish, I don't see an opportunity. If they're dovish, I do see an opportunity, and I see an opportunity to sell the pound. And I would personally favour either using the futures market or using euro pound. So just taking a look here, and we can see just into gold's pushing up to that second level. Remember, any moves back down to this region, I would expect to find dip buyers, okay, on that. And looking at the euro pound for tomorrow, let's just take a look at it technically. I'd expect to find buyers if we see a one and done kind of reaction from the Bank of England, that's it, they've done one more rate hike and that's it, they've reached thing. And you can see that there's some really strong support underneath the 100, 200 exponential moving average. So stops, for instance, if they do decide to take a more dovish approach, can be placed underneath that 0.650 region. So underneath 0.8650 region would be the placement for the stops, and then potentially looking for a run higher back up to 8750, 8800. That would make sense. But all of that depends on the communication from the Bank of England that they, remember, look at the pricing. It would depend that they hike interest rates. Yes, but remember that's 100% priced in, but then they price out with their communication these other interest rate hikes. Does that make sense to everybody? Right? If you could just let me know that that makes sense. Salman, thank you very much. How will recession affect the cryptos fundamentally? I missed your response on this. Great question. Now let me show you something. I'm just gonna, let me just show you. Okay, so let's just go over to, right, let me show you. Right, let me show you. Okay, look at Bitcoin here, right? And then I'm going to put on top of this, like the NASDAQ. Do you notice how when NASDAQ rises, Bitcoin rises? When the NASDAQ falls, Bitcoin rises. You see the close correlation between Bitcoin and NASDAQ. NASDAQ's green, Bitcoin's the candlestick chart. What that is, Salman, is that a lot of institutional investors have very large holdings of crypto, Bitcoin. So they put it in with their tech sector allocations in their portfolios. And the meaning is when the conditions are suitable for tech stocks, you tend to see Bitcoin rise, and when it's not, you tend to see Bitcoin fall. So in the scenario where we see a recession, what I'd expect to see is, if we continue to see dollar weakness, I'd expect to see Bitcoin gain. Now, some of the other cryptocurrencies I'd be less sure about, but because they're paired against the dollar, a mild recession, US weakness should help Bitcoin. Charles helpfully says crypto is a liquidity and a risk-orientated instrument. So, very sensitive to risk and very sensitive to short-term interest rate expectations, hence its close correlation with the Nasdaq. Hope that helps, Salman. Always just pop in here to the webinar anytime here, ask any questions like that you want. What's the risk profile looking like for the dollar, cryptos, etc. We are at a very difficult stage of market dynamics right now because there's a huge deal of uncertainty. Personally, with my own portfolio, aside from very, very, very long-term positionings, I am flat on stocks. I am out of the stock market because it tends to see a seasonal weak period from now until the end of October, end of the summer. So very weak seasonally for stocks, very uncertain dynamic about how the US economy is performing, about whether the Fed really has paused, and the path of inflation. So with so much uncertainties, I'm reading lots of contradictory and uncertain analyst reports at the moment. So the outlook is pretty uncertain right now. Yeah, range trade stock indices from the short side. Very well said, Charles. That is very sage advice. I do like that approach. When it's getting to the top of those ranges, preferring short side to buy side makes a lot of sense. Folks, that's it. So remember, tomorrow, the best opportunity that I personally see is in the Bank of England hiking and then sort of saying that's it, we're not going to be hiking anymore. And I'd expect euro pound upside. That would be my personal expectations. Obviously, the market can surprise, so always manage risk as always, but that's what I'm expecting. Okay, folks, everybody take care. Thank you all very much for your time, and I look forward to being back here on Monday. Thanks, everyone. Thanks for your comments, Salman. Thanks for your comments, as always, Charles. Some very helpful ones there at the end. Take care, everyone, and I look forward to seeing you on Monday. Goodbye.